Fair market value is a price which could be typically realized in an exchange between a willing buyer and a willing seller with equity to both, neither being under any compulsion to buy or sell. An auction value is a price which could typically be realized at a properly advertised and conducted public auction sale. In the auctioneer's world, in Blackbird's world, typically those are held under forced sale conditions and under present economic trends. Most of the work we do is for banks and secured creditors, so they are forced sales, but all auction sales don't necessarily fall under that definition of value. So I want you to keep that in mind as we go through this. So if we take those two values and we put one above the other, you're going to find that the fair market value is typically higher than the auction value. That's not always the case, though. Sometimes, which we'll show in a minute, the auction value can be higher. In the world of Blackbird auctions, most of our sales are forced liquidation sales. We work for the bank, we work for the bankruptcy court, so it's a forced sale. And you'll see that sometimes that's going to play a part in this, and sometimes it's not, which we'll get to in a minute. So let's move that fair market value over to the top, and let's bring this auction value to the bottom. And you'll see that in most typically, the fair market value is going to be a higher number than the auction value. Why is that? Lots of different reasons. It's not always going to be that way. So in the case of a real single-use specialty asset, if its fair market value could be ginormous, it could be huge. And at any particular moment, at that snapshot in time for the auction value, it could be valueless. Take the example of this space shuttle crawler. Look at this thing. It's a single-use asset. Cost countless dollars. I couldn't even figure out how much this thing cost. What's the fair market value of that? What would it cost to replace it? It's a huge number. What's it going to bring at auction? Yeah, well, how much does it weigh? Because it doesn't have a use for anything else. So that's probably the largest extreme between what a fair market value and an auction value can be. But let's move this along. Let's put an x-axis here, and the x-axis represents the asset type. So right under this first dot, we've got real specialty use, and as we move to the right, we're going to get more commodity-based. Trucks, machine tools, a bulldozer. As we get closer and closer, there comes a point where the auction value and the fair market value become the same number. That's an equilibrium point. That's where the stock market rests, and the stock market is an auction sale, and those stocks trade all day long, and they're traded in an auction sale. And that's the fair market value, real time at auction. Let's continue further to the right. Can the auction value be higher than the market value? Well, let's see. How about a piece of art? How about a Monet? How about a racehorse? Sometimes the fair market value is indistinguishable. You don't know what it is, and the auction value is really the only way to sell something. Past the equilibrium point, one could make the argument that the auction value and the fair market value can be the same number, but sometimes it's not, and it's very asset specific. So when you call our office and you ask, David, what's the factor that you use to figure out the auction value from a fair market value? You'll see from this graph, it really depends. It's not the same, and it really depends on what the asset class is.